Hey, it's Dan. Welcome back. You're watching iAllegedly, and I have a good one for you today. We're going to talk about what the rise in interest rates means to the global economy and how it's going to affect each and every one of us on a daily basis. And before I get into it, please take a second. Please hit the like button. Please hit the subscribe button. Share this with everybody. Plus, today we have a sponsor, STRPF Mining. Videos funded by Gold Standard Media, and I'll tell you a little about STRPF in a little bit. Their ticker symbol is STRPF. We'll talk about them in a little bit. But let's get into it. We just had the Fed raise interest rates to the highest level in 28 years, 3/4 of a point. And we have heard from the Fed with story time since January about how the interest rates were going to go up, and we could see things like 1/2 a point, 25 basis points, 1/4 of a point. And they came back because inflation is red hot right now with a 3/4 of a point bump in inflation, in interest rates, which because of inflation, they've done this. Now, we're still under 2% for prime lending rates, which is nowhere near inflation. And the Fed wants to continue to tell us story time after story time about how, we're going to bring inflation back down to 2%. That's not going to happen with a 3/4 of a point bump. It's just not going to happen. But everything that you have, and this affects people worldwide because you're seeing interest rates go up around the globe. You're seeing it go up in the UK, Canada. It's happening all over the place. First thing is you're going to see credit card interest go up. And the thing about credit card interest is that, I've told people time and again when it comes to credit cards to go out, guys, and make sure that you get paper statements on your credit cards. Oh, Dan, it destroys the environment. Why would you do that? Because what they're going to do is slip in new fees and new credit card interest in the coming 30 days, 45 days. You're going to see that. Now, the Fed has said that they're going to raise interest rates as much as 8 times more in the next year. So, you guys, this is going to be continual. And you've got to look out for this. You have to look out for late fees going up, cash advance fees going up, transfer balance fees. I mean, there's so many things that could go up. There's credit cards out there right now that have a monthly maintenance to report to the credit agencies. And those fees, I've heard as high as $20 a month just to have a credit card so they can report it to the credit agencies. It's ridiculous, guys. It's expensive, but you have to do what you have to do to get a credit card. The other thing is that one of my subscribers sent me a letter, and I'm going to try to get her authorization to share it with you. And what the letter was, hey, because of your inactivity in your credit card, we're shutting the card off. So one thing that I tell everybody is go out and use the card intermittently. Now, pay your credit cards off. Do not use your credit cards. Be debt-free. This past weekend, I had 6 people write me to say, hey, listen, Dan, we've paid off all our debt. And, it's amazing. We're starting to save. We're starting to buy metals. We're starting to look at investments. But we don't have to, lose sleep at night knowing that we owe the credit card companies our car payments or anything like that, which is a great way to live right now. But this woman sends me this letter that says, hey, because of inactivity, they closed the account. Now, here's what I recommend, and I do this myself, guys, because I am out all over the place, and I pay for parking. I use the cards intermittently, but what I do at times like this is I'll have a 6-month period. Well, I'll use every card in a week. $3 charge, $6 charge, $5 charge. So the card's active, guys. The card's being used. So they can't shut the card down if you're doing things like that. Remember that. So next thing is you're going to see auto loans go up. And, this is disgusting. The average car payment right now is $721. How would your life be if you didn't have that $721 payment? Plus, talking to people about the insurance rates that have gone up, it's crazy. The insurance rates are going up, whether you've had an accident or not. Things are going up for homeowners insurance, renters insurance, and your auto insurance. And again, if you don't have a renter's policy and you're renting someplace, you're an idiot, because that's some of the least expensive insurance. But if there's a fire, if your place gets robbed or everything gets ripped off or damaged or whatever, you've got a renter's policy to cover that. So the final thing is mortgage payments. With 6% mortgages, you're seeing the average $400,000 loan right now with someone with good credit, just for principal and interest, at $1,875 a month, okay? That's what it is right now. A year ago, it was $1,335 for a $400,000 loan. Now, guys, that's 20% down, good credit, good job, all that stuff. Doesn't include the insurance, doesn't include property taxes or anything like that. Now, again, those are for people with good credit, okay? Plus also, I'm always amazed when someone can have a $400,000 mortgage, because again, these condos that I'm walking through right here, okay? Condos are $800,000 for the smallest unit, 800 grand. It's crazy, okay? Now, nice golf course, beautiful day, but you're going to see mortgage interest go up like you've never seen it. Great story below on how the mortgage industry is navigating 6% mortgages. I'll tell you how they're navigating 6% mortgages. They're not. A company called Notarize Mobile Notary. A few years back, a friend of mine reached out and said, you know what a great business would be for you, Dan, because you're out in your car all the time, would be mobile notary, okay? You go out, you sign loan docs, they sign loan docs, you notarize everything in front of them, it's great, you get paid, okay? Well, Notarize, which is one of the largest companies in the industry, just laid off 25% of their staff this week because there's no mortgages. Mortgage demand has cratered and dropped in half of what it was a year ago. Half of what it was. Now, again, with the Ninja, with Scott Walters, we talked about, predatory lending. Predatory lending is just what's going to be out there, guys. You're going to see the average person that desperately needs money do crazy, stupid things that they should never do. That's what's going to happen with that. With rising interest rates, you also see companies not hire like they used to. And you can say, oh, Dan, that has nothing to do with it. No, it's proven. When interest rates go up, companies cut back on labor usually first. Have people do 2 jobs. That's the easiest thing. Again, my social media director that I have that works for me, works with other companies, and all they're doing is giving her story time with some of these other companies. Slow paying her, less work. Will you do this job? Will you train other people? We're seeing it firsthand. And I explained to her, this is what happens with a declining economy and with rising interest rates. The problem with the interest rates going up the way that it is right now is that you're going to see people cut corners and do things that will affect everybody. And the problem with it is when people have money troubles, they act like they invented their stories. It really is. It's fascinating because people get desperate. People do things to employees. People slow pay employees. Here in California, the laws, I'm telling you, to be a business owner here in California and have an employee, you'd have to be an idiot now. You really would. Because it is truly the toughest state to have an employee right now in the nation. And the laws favor employees, got to give them time off, lunch, and if you ask them questions at certain times of the day or text people things, it could be construed as work time, okay? So, again, real problems, it's only going to escalate from here. Dow's off 20%, NASDAQ's off 30%, the S&P 500 is finally in a bear market and it's down 20%. Where's it going to go, guys? Where's it going to go? Crypto is selling off. And here's what's fascinating with the cryptos is that you're basically having a margin call right now with a lot of these crypto lenders. One thing that I've been, pitched a lot of and I've heard a lot of people talk about is crypto lending. Basically, you put your money, you buy cryptos, and then they take that money and they lend it out to different people for high interest rates, and they get other investors in to do the same thing. They're paying interest rates as high as 10%. The problem with it is that when you have companies like Celsius and Binance and companies that have these margin calls, man, it creates a huge sell-off. So again, the crypto winner. It's going to be interesting to see if Michael Saylor, who is the crypto god, who is, you know, Frank Juster had a great debate with him about how great gold was, which I'm a huge fan of. And Michael Saylor now, from what I've been told, has a margin call at 16,400. So if Bitcoin hits 16,400, this guy has a problem. We will see if that's the case. Here in the States, the national deficit is more expensive to pay back, which is funny. It's not a joke, because how are they going to pay the national deficit back? They're not, guys. They're going to pay the national deficit back. But for each American citizen, our interest on this only goes up at this point. So it's absolutely crazy to think that we're ever going to get to a level that's going to be satisfactory as far as our national debt. I just don't know how they get out of all this stuff. So share your thoughts on all this stuff. Let me know what you guys think. I just think that this is the beginning of the major problems that we're going to see. And real estate's going to be the major problem. That's going to be something that, you know, people can sit there and they write me and they tell me, you're stupid. Prices are still going to go up. Dave Ramsey says they're going to go up. Dave Ramsey would like them to go up. A lot of people have a vested interest in real estate going up. Okay? Dave Ramsey has a lot of good advice. But as far as thinking that real estate's going to continue to go up, but that nobody's going to default here on this golf course, you're kidding yourself thinking that it's going to be like that, guys. I think that you're going to see a lot of people have problems in a short period of time. So share your thoughts on all this stuff. Let's talk about our sponsor, STRPF Mining. STRPF Miner is a junior mining company. Their ticker symbol is STRPF. They're traded on the NASDAQ. It's currently under 85 cents a share. I love the mining stocks, and I love STRPF for a lot of reasons, and I'm going to share that with you. The first thing is Jonathan Moore, the CEO and founder of the company, has put together a great junior mining company. But one thing that's happened lately in the stock market is people are looking for things that have short squeezes and epic plays. And that's what STRPF is. STRPF basically has a huge ownership from the directors and from institutions. Almost 40% from the owners of the company, and the directors of the company own almost 40%. Institutions own almost 40%, to where there's only a 20% float in the company. Now, here's why this is important. The stock is trading down right now about 70% from where it's at and from its highs. STRPF is mining in Canada, and the thing about STRPF that's different is they have what they call a VMS deposit. A VMS deposit is not just one mineral. It's not just copper, it's not just zinc, it's not just silver, it's not just gold. It's basically everything in one VMS deposit. There have only been 350 that have been known to be found in the Canadian mining sector, and STRPF has this. And also, the thing that's amazing is that STRPF, their property is located between two other successful properties, Normetal and Perrone. One of those is owned by Amex, and the other one now is owned by STRPF. So this product, this that you're looking at, is mining inside of an area that's already been proven to be fantastic. With the success of test mines lately, they've had 2 more test mines that have proven to, you know, get these VMS deposits and to be positive. Sorry, I'm on a golf course right now. I hear balls getting whacked behind me, so I'm going to get hit in the head. But they've had stellar results. And the thing about this is that when you have any company out there that has a technology and it gets proven, the likelihood that someone's going to buy that company is exponentially greater. I've seen it in biotech, I've seen it in medtech, and mining stocks are no different. Jonathan Moore is basically holding out. He has said it could be 5 or 6 times the share price. Experts have said the same thing. But what you have is you have something that could be, you know, it could, the price in a takeover or an epic short squeeze could happen with this stock. So I really think it's something that you should put in your portfolio for a longer term. As we go through this economic downturn, you're going to need metals in your portfolio. And Star Peak would be a perfect place to begin. It's inexpensive, STRPF, great management team. They're drilling every day. These are people that are out actively looking for metals in the properties that they have. They have experts that have come on that have agreed to come back, that were retired, that are coming back to work on Star Peak. It's unlike anything else I've looked at in the past. But here's the thing about Star Peak, is that the price right now is dramatically reduced, okay? They've exercised options recently. There's nothing outstanding right now that they owe money on, and the company's in fantastic shape. STRPF is the ticker symbol. Take a look at it, guys. It's something that's really, I'm looking at it. I think you guys should look at it. It's a great company, and the thing that I love about this is that when you look at great things in the past, when you look at, whether it be baseball, basketball, anything that's won in the past, you can only do it with a good team. And what they've done is they've put together the best team I've seen in mining, in any stock that I've ever told you guys about. So take a look at STRPF, and let's get back into the video. Have you guys heard about the Warren Buffett lunch? This is something that happens once a year. And basically Warren Buffett goes out and he auctions off his time for a lunch once a year. And guys, I remember when it hit $100,000. I remember when it hit $500,000. Last year, there was a crypto investor that bought it for, I think, $4.5 million. Well, this year, guys, $19 million. $19 million bucks to have lunch with Warren Buffett. Don't know who the person is, goes to charity, but that is insane, guys. Absolutely insane. As the world is crumbling, okay, there are still going to be people playing golf, okay, having a great time, enjoying their lives, but people can go out and spend $19 million to have lunch with a 91-year-old man. And he has said this is the last time he's going to do it, even though he loves meeting all the interesting people, and it's been great for the charities, because again, homelessness, kids, food, this guy's done it all with that. But you have to look at people are suffering. Airlines right now, in this economy, when things go bad, certain things they say do well. They say generally airlines do well, and they say entertainment does well. Certain higher end restaurants, experience restaurants, which define an experience restaurant, okay? It's not Applebee's, guys, I'll tell you that. They say that they do well. The problem with it right now is that things are a little crazy right now. Airlines are doing horribly right now. People are not booking vacations like they have in the past. Just not happening, guys, right now. People are not driving like they have in the past. I have so many people that have written me and told me, damn, we're not doing anything. Staycation, staying home, that's it. Entertainment, the movies, yeah, you get a hot movie like Top Gun, you get the Jurassic Park movie that does well, but generally people are not spending the money going out to movies right now like they used to. And you're starting to see places like McDonald's that are having huge hits on their income. So share your thoughts on all this stuff, guys. What do you guys think about this? I think it's crazy that somebody would spend $19 million to have lunch with anybody, okay? But that's just me, What would that lunch do? Would it really propel your business to a completely different level, getting this guy? The crypto guy last year, I don't know what happened, because Warren Buffett has just said, crypto's a scam and it's no good. But I'm really curious as to what you guys think about all this. With everything that's happening in the economy, the one thing that you cannot deny are the numbers and the truth. And it doesn't make a bit of difference if you're here in the States or if you're in Australia or the UK. How about this staggering stat? They anticipate half of the builders in Australia are going to go out of business. Half right now of the home builders. That's crazy, guys. But they're having such difficult times completing houses and honoring commitments, time frames, projects, everything. Beautiful. Being on I don't know, the sand trap reminds me of all this stuff that's going on. Think about this, guys. People right now, when Google announces certain trends, how about this? One of the largest trends that people are searching for is recession. They haven't done this and searched it this much since 2004. Well, that's interesting. Okay, so since the last time we had an economic downturn, it is anticipated that half of all Canadians, now we just heard this from Australians, half of all Canadians say that they cannot, I think the golfers hate it when I'm out here this close, I think half of all Canadians that were of retirement age that were surveyed said that they cannot afford to retire right now. So, guys, sad, More and more people have written me and said my 401k is down 40%, 50%, 60%. A guy named Mike Nagaritz, who is a crypto bull, is talking about how, hey, we're going to see cryptos drop dramatically, and we're going to see a recession speed up. I always like that people are talking about this speed to recession. He says we're going to have one between now and 2023. Everyone that I talk to is spending less money. Everybody. Went to the local, it's a big flea market with antiques and things like that for Father's Day yesterday. Beautiful. It's fantastic. Only thing was that talking to the vendors about how the event has gotten smaller, people are spending less money, people are negotiating more, they've had to raise their prices, a little bit of everything all the way around. But people are spending less right now. And at the end of this month, they're going to give us the GDP numbers in the middle of next month and tell us how bad things are. Housing starts off completely. So it doesn't matter where you live, guys. This is affecting everybody, but the key, the recipe for disaster is these high interest rates mixed with high inflation. And it's going to create nothing but problems for people. And nobody wants to admit that. Nobody wants to talk about that and have that be something that is, top of mind. Don't worry, we're going to get through this. We're going to bring inflation back down to 2%. I don't understand how talking about something as if it's real is just going to make it happen, because it's not. I want, a free car. I mean, it just doesn't work that way. And to talk about cutting back and somehow this is going to fix inflation is insane right now, guys. So every time I hear somebody go, ooh, and whack the ball, I always turn my head to make sure it's not whacking me in the head. So share your thoughts on all this stuff, guys, but it doesn't make a bit of difference where you live. This stuff is happening around the globe, and it's a real problem. The biggest problem, though, is the housing problem, because you're seeing rents go sky high. You're seeing foreclosures start to step up. You're seeing mortgages go to a level. Now, great article about what's life going to be like with mortgages above 6%. I'm going to tell you, it's going to be doom and gloom, guys. It's going to be absolutely catastrophic. Now, if you can sit there and go, I can navigate a $1,375 mortgage to an $1,875 mortgage, it's no big deal. It's $500, okay? But the problem with it is that houses have gone up so much in value that it's not $500. It's $4,000. It's $5,000 more. It's crazy numbers more a month. If you guys ever get yourself in front of a mortgage calculator, look at what $1 million mortgage would be if you owed $1 million. Don't forget the taxes. Don't forget the insurance. And again, property taxes. I have people that say my county has raised it $20,000 this year. Guys, it's almost $2,000 a month for some of these people. So share your thoughts on all this stuff. I really want to know where your head's at with all this stuff, and where are you cutting back right now? I'm going to close this video out with this last few things. And once again, our sponsor, STRPF Mining, take a look at this company, guys. Ticker symbol is STRPF. Couple things about this. In the mining space, the former CEO of Amex Exploration is now the chief geologist over at STRPF, and thinks that this is an absolute winner and is ready to see this thing rock and roll. They are drilling at minimal depths and having success with 9 out of every 10 test mines that they're doing, and they're drilling every day, guys. So again, less than 85 cents a share right now. STRPF, take a look at it, guys. It's an absolute winner, and I think that the experts say it could go up 4 or 5 times. Who knows, okay? But again, I love holding metal stocks in my portfolio. Final thing is diesel. It's a great story out of the New York Post about shortages with diesel fuel and what a problem we could have in the coming months with food shortages. If this doesn't scare the hell out of you and get you prepared, nothing will. So take a look at this, guys. There is an additive that is put into diesel fuels, DEF, that trucks do not work without it right now if they're 2010 or newer, and there's a shortage of that as well. So you're going to see major problems with diesel trucks. Everything that you eat is basically delivered by diesel truck right now. So watch these people putt. Final thing, self-driving cars. Tesla, it looks like it's going to be unseated as the largest EV car company. Okay, do you believe that? Do you think that that's a threat? You know, does that interest you or not? Well, the final thing with this is that there have been 400 self-driving accidents in the last year for self-driving cars. Now you can sit there and the self-driving guys and gals are going to write me and say, that's nothing compared to regular cars. But is it safe, guys? Is self-driving safe? I don't see myself rocking and rolling in a self-driving car anytime soon, guys. So share your thoughts on all this stuff. Let me know what you think. And again, take a look at STRPF. Do not forget to hit the like button. Do not forget to hit the subscribe button. Share this with everybody. And don't forget the email list below. Okay, onward and upward, guys. I will see you guys very soon.